Hello, I'm Lelda Smits for the Finance News Network, and joining me to discuss the first ASX-listed fund to target returns for both investors and charities is the founder and director of Future Generation Investment Fund, Geoff Wilson. Geoff, welcome to FNN.
Thank you.
Geoff, you're about to launch a new listed investment company targeting returns for both investors and charities. Who's behind the fund and what are the fund's objectives? I've
got together Australia's best fund managers, or who I believe are Australia's best fund managers. People like Peter Cooper, David Paradise, Phil King, some really good Australian managers. We've got 14 managers in total. They are managing the money, so it's a fund of funds, but they're all giving their fees, their management fees and performance fees, they're giving it back to the company. So they're managing the money for free at no cost. And what that allows is the company to pay 1% of its assets per year to children's charities and focusing on children at risk.
Okay, so how exactly will Future Generation Investment Fund work in terms of generating returns?
The company will invest with the managers in their managed funds. These are the funds they live or die by the performance of. And the company will get returns from those investments and then will flow through those returns to its shareholders. As it's a listed investment company, it'll pay fully franked dividends, and the plan is to pay a growing stream of fully franked dividends to shareholders over time.
So Geoff, which charities has Future Generation Investment Fund identified to support?
The focus is on children's charities and children at risk. Charities like Youth Off the Street, the Lighthouse Foundation, which is homeless children, Act for Kids, which is the old Abused Children's Trust, United Way, which focus on literacy for children from 0 to 5 years of age. They're the type of charities. There's 14 charities, and the fantastic thing about this product, my view is it's a win-win-win. The fund managers are managing the money because they want to give something back. The investor is getting a fantastic deal because he can't get access to those fund managers, and if he does, he gets it a lot more cheaply here. And the charities get a source of funding for a long period of time. This potentially could be a game changer for funding of those charities.
Right, and how will the returns be divided between investors and charities?
The charities will get 1% of the assets per annum, and that is less than what it would cost the investor to invest with those fund managers. And the interesting thing is 3 of those fund managers are actually closed. Lanyon, Paradise and Cooper. It's actually impossible to invest with them. And a lot of the other managers are just wholesale managers, so people can't invest with them. If you invested with those managers, you'd pay at least 1.3% on average management fees, and they all have performance fees except one. So the average performance fee is about 17%. So all that money goes back to the shareholders, and only 1%, which is less than what it would cost if you invested with those funds, that goes out to charities. So, and the investor gets all the upside.
And how much is the fund looking to raise ahead of listing, and when will you start trading?
We're looking at raising up to $200 million, and the issue closes on the 3rd of September, and the shares will start trading again on the 15th of September.
And finally, Geoff, how can potential investors get involved in Future Generation Investment Fund?
The prospectus is open at the moment, and you just need to go to the website www.futuregeninvest.com.au, and you can download a prospectus or you can actually apply online.
Geoff Wilson, thank you for the introduction to a very worthwhile cause.
Thank you very much.